A very good evening. Today is 12th of June. Welcome. I would like to thank you all for participating in today's webinar. Welcome on behalf of NCM Group. We are growing dramatically. All right, so before we begin, I hope everyone's ready. If you're ready, just let me know in the chat box that you are ready. And there are two ways that I can deliver this webinar. The first way is the formal way. It's the official way. I can finish the whole webinar in less than 20 minutes. But if you're really here to learn something of value, you want to improve your existing trading experience, you want to learn something strong, you want to learn something better, you want to improve and make good changes, then the webinar could take more than 45 minutes. So let me know here in the chat box, how do you want me to proceed? Do you want me to take it official way and finish everything in 20 minutes? Or you want me to teach you things properly and we take time and we'll take even question and answers? How do you want me to proceed? Officially, or you want me to take my time? Great. 2 people have just said take your time. 3 people say take your time. Thanks, Mr. Rahil Alam, Ms. Shivani, Mr. Jish, full time. All right, cool, great. I'm going to share my screen now. I'm going to share. Thank you, Mr. Srinivas, Mr. Rajkumar. Thank you so much. I'm going to share my screen and just let me know if you can see it. Can you see my screen? I've switched on the PowerPoint presentation for you. Great. Is my screen visible? So this is how I divide my presentation into 3 parts. Thanks, Mr. Dahil. The first part is the theoretical part. It's more talking, it's more conversation, it's more theory. There's nothing so complicated. So first part of the presentation is going to be more boring. I'm going to talk more. I'm going to speak more because I want to give you a vision. And if you already have a vision about the world of financial trading, I have to expand that vision and channel it towards the right direction. The second part of the presentation is going to be a technical part, and the third will be practicalities. So today's webinar is part 1. All right, we will be doing part 2 later on, and it is delegated to people who work 9 to 5 and they don't have enough time to trade or learn how to trade, or they don't know how to trade after work hours. So we are going to teach you some easy and simple methods to trade today. Okay, so let's go further. But before we begin, a very quick disclaimer. Take few seconds, take your time to read it. Okay, financial trading is risky. Do not invest money you cannot afford to lose. Please try your best not to invest your children's education fees, parents' medication, car installment, mortgage payments, rent payments. Don't do that. Okay, so take your time, read the disclaimer. Only invest money that you can afford to lose. Also seek an independent financial advice if it's needed. So that was just a very quick disclaimer. And I'm going to count till 5. Take your time to read it. 1, 2, 3, 4, and 5. Okay. These are the topics that we are going to cover. We're going to cover partial topics today because we have some beginner members and we also have some people who have intermediate background in the world of online trading. We're going to discuss today what are international financial markets, what are the type of international financial markets, what is the meaning of regulated broker, what's the difference between a regulated and non-regulated broker. Then we're going to talk about what are the different kind of trading styles. There are trading styles. There's something called scalping, day trading, swing trading, position trading. We're going to cover all of these definitions, and I hope all of you have grabbed a piece of paper and a pen and try your best to put your telephones on silent mode, because whatever we're going to cover today, it's for improving your existing trading knowledge and giving you value. and we will talk about what are mechanical trading strategies. Mechanical trading strategies are not automated trading strategies, okay? We're going to talk about different type of trading styles and different type of trading strategies, and I'm going to do my best not to use technical words or technical jargons to show off my experience, okay? So these are some topics. We're going to learn different methods. We're going to learn 3 to 5 methods, and then choose one method which you like from them and practice on demo. I'm going to show you how to download the trading platform, how to use it, how to set up the charts. We're going to learn each and everything, okay? So there are different kinds of financial markets. The first market is called the Forex markets. Forex markets are the currency markets. It's a market where the currencies of leading countries are traded, well-known currencies are traded. You've got 5 big currencies or 6 big currencies around the globe. The first one is called the United States dollar. No matter how strong, powerful the country is and their currency is, their international exports and imports are always done in dollars. The second important market is the precious metals of market, where people trade gold, silver, copper, platinum, palladium. The most popular in the Middle East and globally is the yellow metal gold. The third markets are called the energy markets, where we have the US oil, we've got the natural gas, heating oil, etc. Index markets is where we have S&P 500, Dow Jones, NASDAQ 100, and NASDAQ 100 is also quite famous because it's a composition of 100 multi-billion-dollar technology companies. And then we have something called the equity markets, where shares of leading companies are traded, shares of companies like Google, Tesla, Amazon, Netflix, etc. Then we've got crypto markets, where leading cryptos such as Bitcoin, Litecoin, Ethereum are traded. I'm saying these things quickly because I don't want to waste your time. I want to take you all to the important part of today's webinar. And this session is being recorded, and the recording will also be shared. So these are the important type of financial markets. Now, there are some businesses in the world where a broker is mandatory. You need a broker for some things. You want to buy a house, you want to sell a house, you need a broker. You want to buy a used car, you want to sell a used car, you need a broker. A broker's job is to make sure he or she or they provide you with the best deals that are available, best offers that are available, and they match your needs. Also, similarly, in the world of online and financial trading, because things that are traded are of high value, so the broker is always engaged. Broker can be a person, and it can be also a company. It can be an entity. Broker can be local, and the broker can be global. Always when it comes to online trading or financial trading, you have to make sure that the firm you're trading with is regulated. What is a regulator? Regulator is a local government authority or a government body that monitors and audits financial services provider, that they are working justly and with fairness, and all ethics are all type of business ethics are being practiced. Okay, so let's read from the slide. Trading with a regulated broker protects your hard-earned money. They operate under strict rules, ensuring your funds are segregated and you're less likely to be scammed by a fake platform. A lot of people nowadays are getting scammed in this business. You have to make sure the broker that you're working with, they are regulated. What does segregated means? When you deal with a regulated broker, assuming that this is a broker, okay? This is a broker. And if it's regulated, the regulator enforces that the brokerage company maintains and keeps 2 bank accounts. Something like this. This is the company's own bank account. We will call it A, in which the broker, they have their own funds. By their own funds means they have money to pay off their utility bills, their expenses, employee salaries, etc. And then there's something called another bank account. We'll call it bank account number B. This is the client funds account. Okay, so the funds of clients are always segregated, so the investors or traders, they are protected. If God forbid something worst happens, okay, the clients are always secure. That's one of the benefits, many benefits of dealing with a regulated broker. Now, we are a multinational company. We've got a company, our branch, our office is in Dubai as well, called NCM Financials. We hold ESCA Category 1 license, and we are fully regulated by ESCA, Securities and Commodities Authority in UAE, ESCA, okay? So we are fully regulated. Now, these are just some brief details. We are globally present and headquartered in Kuwait. I am doing this presentation and webinar for you from Kuwait. We are in UAE. You can see SK category license number. We are very fully transparent, and we've got offices in Turkey. We've got office in Mauritius, Malaysia, and we are opening office in many other places. We have multiple payment systems, deposits, and withdrawal methods. Okay, now let's move further. Regulated brokers follow government rules. This means your funds are usually held securely, and if there's a dispute resolution process, if something goes wrong, there's a resolution process. Any issues there, you can always work with it, get it worked out. Now, the cool part is that our brokerage has physical office, and the staff, the sales team, the customer service team, technical teams, they're all present in front of the clients. And we also recommend that you do visit our office, and we also host there some of training programs. The part 2 will also be conducted at our premises. So unregulated brokers, they don't have such oversight. They don't have a physical office. You don't know where they exist. And if there's a dispute, if they're located somewhere else, it would be hard to solve your complaint. And even if you want to file a lawsuit, that is also going to be quite difficult. So unregulated broker, if you're working with them, if you're a trading account with an unregulated broker, you're putting your money at risk, and you won't be able to get a fair treatment. So I hope it's clear. Now, write this down. Write this down. There are 4 types of trading styles. The first trading style is called scalping. First is scalping. Second is called day trading. Third is called swing trading. And fourth is called position trading. Scalping, day trading, swing trading, and position trading. We are going to focus more on position trading and swing trading today. Okay. Scalping is a type of trading method in which traders finalize their trades in less than 5 minutes, around 5 minutes. They would buy or short an asset class. It can be Euro USD pair. It could be gold. It could be oil. It could be cryptocurrency. So scalpers try to get in fast and get out fast of the markets, whereas intraday trading, the traders try to finalize their trades, conclude their trades within the span of 24 hours, or if they're trading in stocks, within the time frame of the stock exchange operational hours. Third kind of trading is called swing trading, where the traders, they hold their trades and they let it stretch for a couple of hours till couple of weeks. That's called swing trading. Position trading is type of trading in which traders hold their trading positions. They have very less positions, maybe 1 to 3 trades, and they hold them for more than a year or at least half a year. So please let me know, are the 4 type of trading methods clear? Just write clear in the chat box so I'll know. My way of presenting is very different. I am more interactive. I want to keep everyone engaged. I want to make sure nobody's falling asleep. Thanks, Mr. Rahil, Mr. Jaz, Mr. Shivani, Mr. Azhar. Great, great. Mr. Raj, thank you. Okay. Cool. Thanks, Mr. Kevin, Mr. Deepak. Great. Now, there are different types of trading strategies. The first type of trading strategies are manual trading strategies, in which traders, they analyze the charts, they use the trading platform either on their mobile phone or on their laptop, computer, tablet, PC. They do manual analysis, they draw their support and resistances, they draw a trend line, and then they take decisions. This is called manual trading. These are manual trading strategies in which they would exit also manually. Mechanical trading strategies are type of trading strategies in which traders use technical indicators. What are technical indicators? An easy definition is it is a visual display of a mathematical formula. Okay, it's a visual display of a mathematical formula. We're going to talk about some mechanical trading strategies as well. Then there's something called automated trading strategies, in which people use trading bots. They rely on trading bots for success of their trading. Number 4 is institutional trading strategies. These are something like price action, smart money concepts, Wyckoff theory, RFT, etc. So we'll try to touch the first 2 parts. The remaining will be touched in the upcoming webinars. Okay. Now, example of mechanical trading strategies. So that's it. We are gonna now talk. Let me start. Let me give you a vision. Now, online trading is just like any other business. If you wanted to start a business, you know, if you had access to $50,000 or $30,000 today, you can start a business anywhere in the world. It can be India, Pakistan, Bangladesh, Vietnam, Philippines, US, Canada. You can get a small franchise and you can start operating. You can even start home businesses. But the effort that was behind saving that $35,000 or $50,000, we all know what we go through of coming up with that kind of amount. And let's suppose, even if you had access to $50,000 or $30,000 today, and you wanted to start a business, you have to go through a lot of crunch and hassles. You have to find a place, you have to find a location, then you need some business approvals, you need to furnish. If you are going to start some professional business like financial consultancy or legal services, legal advisory, you want to recruit people professionally, you might be looking for a professional recruiter who will charge you money for getting you some CVs. You know, then there are rental costs included, so many overheads, etc. Right? So online trading is also like a business, but it doesn't require a huge capital. You can even start with $500. Not only $500, you can start even with a demo account or a practice account where you'll have real markets. You can see the real charts. You'll have fake money, practice money, or test money. Okay. And you can practice until you gain some confidence. But just like any other business, how it requires some resources, it's good to have a decent smartphone. Decent smartphone doesn't mean you have to get the latest Android phone or iPhone. You know, an acceptable phone with a wider screen. You need a reasonable laptop or computer with i3 processor. You don't have to go for something fancy. Computer or laptop is preferred because the advanced features, you can see it in much better way on your PC or a monitor than on your phone. Okay, our next webinar, if you are an NCM client, if you become our customer, there will be a special webinar that will be hosted on trading strategies for mobile phone users. We're also going to host that. Okay, so it requires not only some devices, it does require a decent and stable internet connection. If you are connected to an internet where 15 people are connected, you might experience a lag in prices. What is the lag in price? You might see the prices are moving slowly, or if you are buying an asset, or if you're shorting an asset, if you're closing your trade, you might see that there is an issue. It's not closing properly on the given price. You saw it's it's closing a different price. 2 reasons. First reason is that maybe you have poor internet connection. Second reason can be slippage. What is slippage? Slippage means that the time you are trading, executing your trade or finalizing your trade, the markets were very volatile. They were moving very fast due to any global economical fundamental reasons. Okay, that you didn't get the price that you were trying to get. So prices are variable. Okay, now, shall we go with the easy method? Let's go with the easy method first. What is swing trading? Swing trading is type of trading strategy in which traders hold their trading position from few hours, few days to few weeks. You stretch the trade. The smallest lot size that you can trade with is 0.01 lot. If you learn how to master 0.01 lot, then you can trade with bigger lots as well. The strategy, the technique for trading $1,000 or $1 million is exactly the same. The only difference is that $1 million has extra zeros added to it. So a key tip here is write it down, start practicing with 0.01 lot. And how you can start practicing, you can visit our website. You can go to our website, NCM Financials. This is the website, ncmfinancials.com. And when you go on the website, you can see here, it's written here, download MT5. Download and install this trading platform. Okay, download and install this trading platform. And if you have any questions, you want to know more about the trading platform after the webinar, you can contact the gentleman, the person who called and invited you to attend this webinar today, and we are also going to provide you with some contact details. Okay, or very easy, instead of me providing, you can even click on contact us and you will see our contact numbers. You can call our office, or you can even visit them with your laptop and you can ask them to set up the trading platform for you. So we highly encourage people to visit our office to get some confidence, to get to know the staff, and they can even give you some additional trainings and additional support. So in swing trading, now everyone write this down. The Forex markets operate from Monday to Friday, approximately 24 hours. The currency markets, the major currency markets work 24 hours from Monday to Friday. The gold market, we're going to talk more about gold today. The gold market operates approximately 23 hours daily from Monday to Friday. So even if you're working from 9 to 5, it's totally fine. It's okay. There is no specific time where you should trade. The market has a mind of its own. It has its own behavior. The market is fair to everybody. The market will move when it wants to move, and the market will not move when it wishes to rest. There is no special time where the market will move very fast, very slow. It all depends on many factors, which we're not going to cover today. So we're going to talk about fundamental, we're going to talk about more of swing trading strategies from different angles. I'm going to give you something very easy. Now, our example is gold. You're going to use 0.01 lot size, open a $1,000 or $3,000 trading account. Here's one tip. Here is one tip. If you have a $1,000 demo account, again, whatever I'm going to discuss today in today's webinar, it's only for educational purposes only. If you wish to use it practically on live accounts, you do it at your own responsibility. On $1,000 account, you can use 0.01 lot size 3 times. You can take 3 trades of 0.01 size. Okay, just write this down. Which means if you have $2,000 account, you can use 0.01 lot size. You can take 6 trades, more the merrier. If you have $3,000 account, you can use 0.01. You can take 9 trades. Okay. Now a trick. Just take a screenshot. I'm going to count till 5. Just take a quick screenshot. 1, 2, 3, 4, and 5. Right now, we are in the technical phase. We are on the technical phase. We'll go to the practicals later. We're going to go after this into the 0.01 not only for gold, you mean? Yes, only for gold, Mr. Mike. Yeah, we're using gold as an example. In swing trading, if you remember, you take only few trades. You don't take so many trades. And you hold them. You hold them. So even if you had a $2,000 account, alternative is you can take a 0.02 lot and you can keep 3 trades. If you have a $3,000 dollar account, you can take 0.03 lot and you can keep 3 trades. Take 3 best trades. Okay, take 3 best trades. The trading chart that is used for swing trading, it can be a 30 minutes chart. Now write down charts to be used for swing trading. You can use a 30-minute chart, 1-hour chart, 4-hour chart, or a daily chart. Choose one. The method that you're going to learn here today is universally applicable on everything. Everything and every time frame. Even if you don't know how to use the MetaTrader 5 trading platform, it's totally fine. You can visit our office. Our offices are there to help you and teach you how to use the MetaTrader 5 trading platform. Sorry, we're using MetaTrader 5 platform. They'll teach you on mobile phone, laptop, whatever, and there are no charges. Okay, 30 minutes, 1 hour, 4 hour, and daily chart. These are used for swing trading. Okay, now let me teach you something cool. I'm gonna go on a daily chart on gold and I'm gonna zoom out. I'm going to zoom out. What do you see here? What happens in the long term? What is the behavior of gold in the long term? We can see data here. It's accessible to us from 2019 until 2025. So for the last 6 years, we can see the long-term trend of gold is always towards the upward direction. It means it is better to go for buy trades versus the short trades. You can take short trades, but the buy trades or buy trades are also called long trades. They are much more preferred. So now we learned by zooming out, by using the daily chart, that the overall long-term trend of gold is towards upward direction. This is due to the global monetary system. We have inflation. We've got things getting expensive all the time. So anything that exists in reality or physically or anything that's tangible, their prices always tend to increase gradually with time. And we have learned what's the trend of gold. Now, whenever the gold crashes, how much does the gold crash? We can see a gold pricing crash here. We've seen a crash here. This is also a crash. This is also a crash. This is also a crash. And this is also a crash. So you can take the biggest crash, you can measure that crash, and then you can identify and you can predict, you can anticipate. It's not guaranteed, but you can know, you can have an idea, you can have some knowledge that how much does this asset class crash. So if we go here, I use the center mouse click, hold with left click, stretch it down. I can see here the gold crashed approximately $470. $470. This was the crash. Now, $470 crash. Some people also say it is a 4,700 pips crash. Some people say it is a 47,000 points crash. Also, take notes. Also, take a screenshot. Yes, I do understand that it's being recorded. It will be published, it will be shared, it will be put on our YouTube channel. And you can also request the recording of this video by our sales representatives. But when you write things by your own hand, you know, they will stay in your mind longer and you will remember. Now, here's a catch. Markets, they always move in symmetry. Market don't go straight up and the markets don't go straight down. The markets don't go straight up, they don't go straight down. They always go in zigzags. There's always breathe in, breathe out, breathe in, breathe out, breathe in, breathe out. You know, that's how the markets move. Not, they don't go straight up, they don't go straight down. They always give you a chance. Okay, so this was the high and this was the low. This is where the market crashed, and we know it crashed about $470 or 470 pips. If you're trading with 0.01 lot size, one lot size, each dollar on gold, each dollar Or let's say 1 pip of gold is equal to 10 cents. Is equal to 10 cents. 1 pip. Okay. So what is the effect of 10 pips? 10 pips is $1. 100 pips is $10. And 1,000 pips is $100. Can you see that? Just take a screenshot once again. Right now, price of gold is 3386. Okay. 3386.00. If it goes to 3386.10, this is 1 pip. This is 1 pip. If it goes from 3386.00 to 3387, this is 10 pips. Am I fast? Am I being fast? Or is it okay? Sometimes I get excited. So if it goes from 3386.00 to 33, I'll explain everything and answer all the questions. 3396, this is 100 pips. And if it goes from 3386.00 to 333486, this is 1000 pips. Let me see the messages. It's bullish upward trend. Yes, great. Is everybody okay? Is everybody okay with my speed? Am I fast? Am I slow? Is it fine? Are you catching up? Even if you don't catch up, it's fine. I'm gonna help you out. Pips. A 10-cent movement on gold is called a pip. All right, thanks, Mr. Rahil. Okay, wow, everything mixed. No problem, no problem. Okay, now we know that the gold dropped $476, which is 4,760 pips. So if you took a wrong trade, let's suppose markets are random, you took a buy here, you took a buy, and the size of your trade was 0.01. Okay, this was 0.01, and the market fell down. You know, when the market reaches this bottom, 400 on 0.01 lot, $470 was the drop on gold. Okay, 4,700 pips or points. This is equal to actually minus $470 loss. Minus $470 loss. So you can always take in layers. You can always enter in layers. You know what I mean? For example, you found out that the market is moving within this range. This is the range of the market. Okay, and you have funds to trade. You do have, you don't have to trade. You don't have to trade with the whole amount. You don't have to use big lot sizes. You don't have to risk all of your capital. You can take smartly some trades in the middle. Even if you are wrong, you didn't catch the proper entry, just take small trades and scatter them in small portions. So sooner or later, what's going to happen when the market reverses towards upward direction, all your losing trades will convert into winning trades. But what's the issue with taking the wrong trade and the right trade? The only problem is if you were taking a buy from here and the market started to shift towards the downward direction, because you're trading small lot size, maybe you won't lose all your funds, but what's going to happen is that you are going to lose a lot of time in the middle and you have to wait a lot. This is the sad part of swing trading, and this is one of the ways to take an entry. Split your orders. We've talked about 3 position or 6 positions. you can always scatter them. So this is something I'm giving you a visual idea. Now I'm going to give you the most easy way to trade and use your trading. Now let me teach you what are moving averages. Okay, templates, we're going to go for blank template. This is a gold chart. You can go on a 30 minutes gold chart. Go on a 30 minutes gold chart, or you can use even a 1 minute gold chart, up to you. 30 minutes also fine for swing trading. Go to insert, indicators, trend, moving averages. If you want to take a screenshot, take a few seconds, take a screenshot. We are going to do this step 2 times. You're going to add 2 moving averages. First is called 15 moving average, and second is called 30 moving average. So team, again, if you're working from 9 to 5, today's webinar is going to teach you a method. It's going to teach you a strategy. It's going to teach you a style in which you don't have to look at the charts all the time. You don't have to focus on the charts all the time. You don't need to learn complex analysis. You don't have to go into in-depth of fundamentals, global events. You don't have to follow any fancy trader with good video editing and Photoshop skills. You can do things by yourself. I'm going to make my job as an instructor and trainer is to make the trading journey easy for you. And I think I forgot to introduce myself. My name is Mahsin Khan. I'm the head of learning and education and marketing operation for all the NCM Group subsidiaries. So you can even reach out to me by training@noorschemacademy.com, or you can even contact your account manager. And you can even, once you become a customer, you can even ask for one-to-one sessions. Okay. So moving average, here you'll mention 15 exponential moving average and select the color yellow. Keep the thickness to number 3. 15 exponential yellow 3. Okay. This is also, these steps you can also do in the mobile phone. Then you do it again. Insert indicators, trend, moving average. This time change it to 30. Maybe you can choose the color of your liking. I like deep pink. Now see how easy it is. Just try to understand how easy this is. The vertical lines, these are called period separators. Each vertical line here represents 24 hours, 1 day. This is the most simplest and most easiest method. And I'll tell you why some people, why they still lose making money on this. I'll even share that. When the yellow line crosses above the pink line, you take a buy trade. You hold that buy trade until you see decent profits and until yellow line crosses below the pink line. For example, this was a yellow line crossing above the pink line. You would have taken a buy, and when the yellow line crossed below the pink line, you would have exited that buy. You would enter again around this area here, and you might have exited around this area as well. Is this method easy? Yellow crosses above the pink line, you take a buy, and yellow crosses below the pink line, you exit your buy. Is this simple and easy? For that, you don't have to look at the charts all the time. You'll get trades very, not on daily basis, but when you get them, you're going to get very strong trades. Now let us zoom out further and we will see more of these things. Can you see here? You have to use a small lot size. You have a buy cross here. Okay, then you have a sell cross. Then you have a buy cross again. Then you have a sell cross. Okay, then you have a buy cross here maybe again. You can take a buy here as well, and you can take a buy. You can have 2 buys. And when both of them shoot up here, you can exit both of them. You take another buy and you exit that buy. Now, is this simple? Is this clear? What must be the take profit and stop loss once trade is executed? We're going to come to that point. Now, because we are assuming that we have a $1,000 capital for trading. Let's begin on demo. Even if you took a 0.01 lot and you're not taking more than 2 trades, you don't have to worry about the stop loss. The reason being is you're stretching the trade often. You could, if you want, you could keep a stop loss of 200 pips. Up to you, 200 to 300 pips on 0.01 lot size. This will be equal to minus $20 or minus $30. But if you win, because you're letting the trade swing, your wins would be bigger than the losses that you would incur. But this one is possible to trade without stop losses because you're not overexposing your trading account. That's why we suggest you do this first on the demo account for some time. Do it for 1 week, 2 weeks before you move to a live account, and you'll get an idea, you'll get the feeling. Now, this is all theoretical. It is technical and practical, but it's more visual, you know? All right. So there are many examples here. There are so many examples. This is one of the most easiest method for people who are working from 9 to 5. You see, maybe some people might say, if it was so simple and easy, why didn't tell us from the beginning? I have to use some theoretical stuff and material resources because there are beginners also here. There are some advanced members, and I have to take everybody together. Okay. Any questions for this method? We'll go to the other method as well. This strategy it's for swing trading. Mr. Shah, it's for swing trading. With moving average, we should always monitor whether it's crossing or not done. Yeah, you have to monitor. Not always. You can monitor every 4 to 6 hours, 2 times a day. Maybe after 5 o'clock when you reach home, or at 9 o'clock. You know something? Success is few simple disciplines practiced every day. Whether it's financial success, physical success, emotional success, or personal success. Few simple disciplines practiced every day. 9 to 5, you do your job, you serve your employer, you work for your employer, you work for your managers, seniors, and directors, fine. 5 to 12, you have to make a decision. Either you can watch television, you can entertain yourself, or you take a portion from that 5 to 12 in the evening at night. You know, delegate a time. 8 p.m. or 9 p.m., you know, you can work and just give half an hour. This method only requires less than 5 hours a week. Okay. The parameters for moving averages are 15 and 30. There is no concept of take profit and stop loss. The moving average crossover is your entry, and the moving average crossover is your exit. 15 and 30 exponential moving averages. How to enter and how to exit? There is no concept of take profit and stop loss in this method, Mr. Sajesh, because you're using 0.01 lot size on a $1,000 capital. You can use half an hour. You can start with half an hour or 1 hour. Half an hour is okay to go with. Some people even use 5 minutes, but 5 minutes is for day trading. It's not for swing trading. Okay. 15 and 30 exponential moving averages. Yeah, the trade will be open because you're trying to swing. You want to hold the trade. Here's your buy cross, yellow crossing above the pink line. And then you exit around this area. Then you have a buy cross somewhere here again. This is a mechanical swing trading strategies. Your trading decision is based on the technical indicator itself. Okay. Yeah, but it's not recommended. Don't do it in 5 minutes. If you're someone who's working 9 to 5 and you have to see, trading should be easy, relaxed, and fun. This webinar is trying to make it less stressy. My objective of doing this webinar with you today is to reduce the stress levels of trading. Because if you were working 9 to 5 and you look at your chart, you will not be able to perform in your jobs. And in parallel, you know, there will be so many signals that will be coming, and it will create a lot of frustration. You can see here's a buy, daily there's an exit, daily there's a buy. You know, it's very frustrating. So better to use a bigger time frame and try to stretch the trades. You see, the trades will overlap. You will keep on piling trades. Don't do that. Keep keep for yourself a limit of 3 trades only maximum on the account. Don't go for more than 3 trades. No. Mr. Shah, if you remember, we calculated how much the market can drop. We are using past information. Of course, it doesn't guarantee anything, but we have an idea. On one, for 0.01 lot to blow the whole account, the market needs to fall 10,000 pips. It has never happened ever in the history. Maybe in 2008, but after that, it never happened. Okay? So, this is one strategy. This is one method. This is one technique. Shall we go for the second method? Is everybody ready for the second method? All right, everybody. Now, second method is also the most easiest method. But I want to share with you after the second method, I want your feedback. Let me know if you ever found much easier method than this one. Okay, let's go to the next method. It's also very easy. You go to insert, you go to indicators, you go to oscillators, you go to the MACD. These are the steps. Go to MACD. These are your settings. 55, 233, 9, yellow. Thickness is level 4. The most important part, the heart of this strategy, the heart of this technique, when you go on levels, there's something called level 0. You have to click on add. It will add the 0 level. This is the MACD indicator. Go to your 30 minutes chart. Okay, this is the most easiest method. Here is the 0 line. This 0 line is the heart of this trading strategy. You see these yellow lines? These are called histogram bars. These are histogram bars. If these histogram bars are above the 0 line, it means the market is bullish. It is in towards the upward direction. If the histogram bars are below the 0 line, it means the market is bearish. So the MACD indicator with these special settings of 55, 233, they are telling you what is the trend of the market. In parallel, they can even give you entry and they can even give you exits. If the MACD histograms, they cross above the 0 line, this is your trigger to buy. This is your trigger to buy. This is your trigger to buy. If they go below the 0 line, this is your trigger to exit the buy. This is your trigger to exit the buy. And this is your trigger to exit the buy. You can hold or you can keep. This can be used on any time frame, but for swing trading, you can even do it on 5 minutes. You can stay, if you want to stay safe, you can keep on 30 minutes as well. For example, look here. This was the first entry of buy. Excuse me. This was your first buy, and you can see it shot from here until here. All right. So you can see how many pips were made here. If you're trading a 0.1 lot size, this was an easy $58 or $59 gain. From here, this is, it did go more than 132 pips, but this is where you would have exited. Is this simple and easy? Do you have any questions so far? How to make confirmation? Very good question. Just let it cross above the 0 line. And you can, if you want, you can wait for 3 to 5 histograms if you want. Here. 1, 2, 3. Up to you. Up to you. Let the candle close above the 0 line. This is your entry to buy. You want to wait? You can wait. It's up to you. Okay. Now, if we scan the history, if we review the charts, you can see these settings, this swing trading method, you use a small lot size. Sometimes the trade went for days. Here, it went for days. It kept on going up. Almost one trade was open, and $300, 30% in kind of a month or a month and a half. Not bad at all. This was the second most easiest method. So I think that's more than enough for today. And if you have questions, let's take your questions. And I hope you enjoyed today's webinar. Was this easy? There's some point where it went up and came down. Mr. Mike, yeah, that's part of the trading game. Things won't go in your favor all the time, but they will often go. But the best part of this method is that you are not over leveraging your account. You're not over trading. You have hardly 1 or 2 or maximum 3 positions open. So you won't even hurt your account. Sure. Mr. Rahil, I will give you the settings here. These are the settings for MACD. But use one method. These are the settings for MACD. Okay. And if you want to go for moving averages, you just go for 15 and 30. 15 and 30. So I hope everybody enjoyed today's webinar. If you have any questions, feel free to ask us. You can ask your questions in the chat box. If you want to come over the microphone, just raise your hand from the reactions button. Once you raise your hand, I'll unmute you and you can even ask your questions as well. Great. Sure. These are the MACD settings. Any questions? I believe if you hold a trade more than 24 hours, there will be a broker overnight charges. All right. I believe if your deposit is less than $50,000, we don't charge swap. You can even double check with our officers. We have swap free accounts for less than $50,000 deposits, but just contact our office. They will tell you. We don't discuss Sharia compliancy. I'm not a certified or licensed Islamic banking professional, but when it comes to charges, I believe if the deposit of the account is less than $50,000, it's not more than $50,000, the account is swap free. The best thing would be to contact our office and they will share with you all details. Okay. All right. These are the MACD settings. The session is being recorded. You can review it again. What you have to do is just go on YouTube and write noorcmacademy.com. Just go to YouTube and write noorcm, one word, academy. Okay. No, you have to choose one. Either you use MACD or you use double moving average crossover. If you want to swing trade, if you're a busy person, use it on 30 minutes chart. Okay. So shall we end the session? I hope you all enjoyed today's session. Thank you so much for your participation. You feel free to contact us and get back to us if you have any other further queries. Our offices host weekly trainings on how to use the trading platform MetaTrader 5 as well. They are all on standby. So we'll take one more last question. EMA is also review in 30 minutes. Yes, you'll use the EMA for swing trading on a 30 minutes chart. Yes, you're right. All right, my name is Mahsin Khan, Mr. Sajesh. So everybody, thank you so much for your valuable time. I know it's time to spend time, it's time to spend time with your family and friends for dinner. And thanks for your attendance and participation. We wish you a lot of success and good luck with your trading journey. And if you need any support or assistance or help, you can contact us. Have a great evening. Have a great upcoming weekend ahead. Take care and bye-bye for now.